We're on the verge of the biggest Bitcoin supply shock in history. Everyone knows that Strategy is buying billions in Bitcoin every week, but not a lot of people know about Strive. Strive just became the first US listed security to pay cash dividends daily. And everyday people are beginning to wake up to the realization of the benefits of digital credit. And it's not just everyday retirees. Pension funds are starting to add Bitcoin to their portfolios in droves. But honestly, this isn't going to lead to the Bitcoin breakout. There's an even bigger signal that'll tell us when Bitcoin's ready to break out.
You texted me a very interesting idea. Usually we talk about Bitcoin, and you mentioned Dogecoin.
But the data I love the most is the data that I can attach a signal to.
Dogecoin? What signal can Dogecoin possibly give us about a Bitcoin breakout? What does the Wall Street Journal's latest article signal about a Bitcoin rally? We're going to discuss how the next bull market won't be fueled by treasury companies, but actually, the signal is going to come from the crypto bros. This is Dante Cook with Bitcoin Simply. Let's go. Something's coming to Simply Bitcoin, and it's going to be the biggest thing that we've ever dropped as a company. We're not sharing everything just yet, but we want to invite a small select group of people into the behind the scenes of what we're building, and we want to make sure that you're a part of it. Join the launch list now. The link's in the description.
A big bank that I do business with put out a preferred stock report, and they published all the preferreds, and the average preferred stock in the United States and in our capital market pays 6% and is illiquid. You know, if you're Strive and you have a preferred stock that pays 12% and is liquid, what's that worth?
A lot.
How much more would it be worth if it not only pays 12% but 13% and not dividends every month but every day? Strive SATA just became the first US listed security to pay cash dividends daily. Look at this tweet from Mike Alfred. He said his mom just got her first dividend from the SATA product and was amazed at how much that it paid out. What if it paid out more and it did it more frequently? How many more retirees like her would flock to digital credit? They don't even know that when they're putting their dollars to work to get a dividend in fiat, that they're buying more Bitcoin and issuing a supply shock. The world calls everything that they don't understand a Ponzi scheme, but it's actually really simple. They're taking advantage of a dislocation in the preferred stock and dividend market. Bitcoin is not only a 24/7 liquid instrument when the majority of preferred stocks are backed by non-liquid instruments. And it's an asset that has a history and a track record of appreciating more than the underlying assets of other preferred stock vehicles. And this is what Strive and MicroStrategy are doing with Stretch and with SATA. Neither of the companies will have any debt. As MicroStrategy said, they're buying back $1.5 billion of their convertible debt. So this is a company that's going to have $100 billion in Bitcoin assets on its balance sheet, growing 1 to 2% a week through Stretch, and it's going to have 0% debt. This is going to make the index committees think long and hard about whether MicroStrategy or MSTR should be a publicly listed company in the S&P 500. It already passes every other qualification. And when this happens, the education and awareness around its products is going to explode. This is the singularity that nobody saw coming. But is MicroStrategy getting a little too full of themselves? Are they missing the plot and thinking that Stretch itself is the money?
Howdy. You see that behind me? Black gold. Now, black gold on its own don't do much. Oil companies refine it, turn it into gasoline, helps me work. Well, Bitcoin is digital gold, and Strategy refines Bitcoin, turns it into Stretch. That's what powers my money. It works for me. Stretch, 11.5% annualized dividend rate, paid monthly, listed on NASDAQ.
Bitcoin is the money, and one thing is clear. The money is so broken, we need products that return 8, 9, 10% just so that we can make it. This is the reality. And this is why every time Bitcoin doesn't deliver on the time frame and time window of most retail investors, while they dump it. And every few months we get an article like this one from the Wall Street Journal that says that Bitcoin has failed, that Bitcoin OGs and investors are flocking away from Bitcoin to other crypto projects. In this example, they say is Zcash, which reminds them of Bitcoin in its early days. And this is a bullish signal. Every single time when Bitcoin doesn't deliver on the get-rich-quick scheme that everyone is hoping that it does, well, you see clips like these from crypto influencers, which is bullish.
Do you hold any crypto currently, TGR?
All just stables right now. And
You know what? I got out of all of my Bitcoin. I took a loss. I was buying a bunch as it came down to like 100,000, and as it got into 90,
and slamming it too, right?
Yeah,
Have you talked about the figures,
bro? I put in close to like 1.5 mil. Bro, like, yeah, a lot. But like, yes, I mean, obviously that's going to hurt. You know, I'm going to lose 6 figures on it, but I would rather take that loss and allocate that money elsewhere.
Yeah.
I
remember that's where I'm at, man. I thought it was a good
not
spot.
the same, bro.
This is a signal. This means that retail investors are no longer invested in Bitcoin. This is the signal in the noise.
The data I love the most is the data that I can attach a signal to. So,
and this is the signal that Jordy Visser saw that he said is going to be the thing that tells us when the next Bitcoin boom comes. But before we get there, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018. They allow you, if you've been stacking Bitcoin, to not sell your Bitcoin and to not get any capital gains for borrowing against your Bitcoin. You can borrow up to 50% of the value of your Bitcoin stack. That won't be relent out, rehypothecated. It just sits in their dashboard in cold storage. And you can repay it at any time at rates that are about half of what you can with a credit card. Oh, and there's no credit check. It's just, do you have the collateral? The collateral's Bitcoin, that's pretty good. All right, we'll give you a loan and fiat into your account in less than 6 hours. The process is simple, fluid, and easy. Go to learn.ledn.io/simply to get started. One of the things that we truly believe in this revolution is not buying derivatives and things on top of Bitcoin. Bitcoin is actually money because it allows you to take sovereignty over that money. There's no bank, there's no middle person, there's no third party that says that you can't store and have value in your money. But you can only truly have confidence in that if you hold the keys. And that's why we partner with the Bitcoin Way. Members of their team help people who watch this show and this team set up their sovereignty and their privacy. Even if you don't think that you need it now, sort of like an umbrella. It's better to have it and not need it than need it and not have it. Schedule a free 30-minute meeting with their team, and they'll talk you through exactly why you should run a Bitcoin node, why you should learn how to send a private transaction, why you should manage your own Bitcoin keys and not have a third party do it. Go to thebitcoinway.com/partner/Dante-Cook to get started.
I think a year from now, people will be looking at crypto in the same way. They're not paying attention to it right now because it's not moving. So this is where Dogecoin fits in. Dogecoin to me has no institutional sponsorship. It has nothing associated with what I'm doing. And that's why me not looking at it's important. The reason I started looking at it is technically it looks close to a breakout. At the same time, Bitcoin up near the 200-day moving average looks like a breakout. Ethereum around 2,400 to 2,450 to me would look like a breakout. But Dogecoin to me, if it can break out and actually run, that would mean that retail is starting to get interested. We talked about how retail was focused on AI. Well, guess what? If I'm right about memory, that whole DRAM thing right now, it's done. It's not that it won't be back in a year or maybe 2 years, but it's already had a huge run. Micron has outperformed every Mag 7 dramatically since 2018. Dramatically. Forget the last year. Dramatically. So I think we're at a point where you have to watch things like Dogecoin. You have to watch things like Bitcoin. If Bitcoin gets above that 82,000 level, it will have broken the 200-day moving average. And I'll end it on this. I said the most important thing was the regime shift. This week, we have negative real yields. And I think they're only going to get worse. And I don't think the Fed is going to move rates. And I think earnings in the S&P are still going to be good, which means there will be a floor to the stock market. Even if we get a sell-off, you want to be in a position to buy things because I think they're going to have to do something in rates. And that's why rates moving higher is actually the best thing for gold, for silver, for copper, and for Bitcoin, because the government will have to push rates back down. And that's going to take some kind of debasement move that they're going to have to do to keep these under control. And I think that's a positive.
So I just want to make sure people understand, because they're going to hear Jordy, Dogecoin, and they're all going to freak out. But what you're saying is you almost don't care what the underlying asset, the thesis, etc. You're using Dogecoin as almost a retail index. You're saying there's no institutional participation here. And therefore, if there is excitement in the quote unquote retail index, which just happens to be named Dogecoin, then that is a signal that you would use that retail excitement is coming back to crypto more generally, Bitcoin, etc. And so really you're almost using it as like an alarm system because it is the most pure play, non-institutional asset that has size and liquidity in crypto.
I don't even need to say anything else. You just described it exactly the way I'm using it.
All right. What does this mean for Bitcoin? Well, Doge is the retail proxy. There's no institutional investors in Doge. And so what we can look at right here is that there is an institutional floor with Bitcoin, with companies like Strive and MicroStrategy buying Bitcoin every single day and week. Right now, up to billions of dollars worth of Bitcoin every single week through those products. We know that there's an always on ready demand buyer for Bitcoin, but it's retail who actually drives up the bid price when Bitcoin runs. And Doge is a proxy for that. And what these different products, the Kalshis, the prediction markets, what they tell us is that the world wants and needs to gamble. Why is every commercial break in every playoff basketball game you watch about DraftKings? It's because people need to take moonshots in order to feel like they're getting ahead. A salary is no longer enough. Even the politicians know and understand that you need more than your salary just to get ahead. And that's why they still advocate that they can do insider trading. Come on, man. It's what we need to survive.
Well, look, the salary of Congress has been frozen since 2009. When you adjust for inflation, a member of Congress today is making 31% less than they made in that year. It goes down every year. And over time, if you stay on this trajectory, you're going to have less qualified people who are willing to make the extreme sacrifice to run for Congress. I mean, it's just people just make a reasonable decision as a family on whether or not they can come and move to Washington, have a residence here, a residence at home, and do all the things that are required. So the counter argument is, and I have some sympathy, look, at least let them engage in some stock trading so that they can continue to take care of their family.
Warren Buffett has a fix for this. It's called accountability. If every single year our deficit was more than 3% of GDP, well, then everybody would be fired. That would solve the problem immediately.
I get in the deficit in 5 minutes.
How?
You just pass a law that says that anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election. Yeah. Now you've got the incentives in the right place, right? So it's capable of being done. And they're trying to use the incentive now that.
But it wouldn't actually solve the root problem, because the root problem is the Fed. Before the Fed, there was market crashes and booms. There are fires, there's ice, there's rain, there's storms, there's sunshine. It's called seasonality. It's built into the world. We have 4 of them every single year, and no one questions why it's hot one part of the year and cold another part of the year, why things go up and why things go down. But as soon as we started to create a steady state, have everything be fixed, no volatility, well, that's when we created the problems. And the problem was the Fed intervening.
Anyone who studied history knows that for the first 150 years of this country, the federal government did not intervene when the economy turned down. And all that time, the downturns all corrected themselves. One of the most classic examples was on the Warren G. Harding. When his first year in office, he found the unemployment rate at 11.7%. He did absolutely nothing. And he did not spend more government money. He cut back government spending. The Federal Reserve had the interest rates up at 6 or 7%, not down at 1% where they are now. The next year, unemployment was at 6.7%. The year after that, it was 2.4%. So the economy has recuperative powers.
The system would naturally correct itself. Whenever there's too much brush, well, there's a forest fire and it clears it out. And there's fresh soil for new plants to grow from. The same thing is true with the economy. When there's over leverage, there's too much exuberance, there's people gambling and doing things that they shouldn't do, well, they get wiped out. But there's more investors that can step in and buy these things. But when you try to eliminate all of the downside, all of the risk, the too big to fail banks, well, you create a system that continues to need to be propped up in order to function at a normal capacity. And that's why everyone needs to invest all the time. They need to invest in products and find the next thing to invest into. And so what I'm telling you and what we've been telling you on this show is that Bitcoin is the best area to invest. Let me share with you a clip from Larry Fink, the manager of the largest investment trust in the world at BlackRock. He manages over $13 trillion worth of assets. And here's where he says that you need to invest.
The United States is short power,
We're short compute, we're short chips, and there are going to be shortages in all three. And memory, 4 things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
He's talking about AI, scarcity, compute, derivatives being built on future compute. He's talking about infrastructure. There's no greater way to invest into AI, scarcity, compute, and future infrastructure than Bitcoin. It ticks all of those boxes, and it has the geopolitical upside behind it that when there's chaos, that when there's disruption in the governmental and political sphere, Bitcoin is going to be a hedge. Bitcoin's going to be a hedge against inflation. Bitcoin already has institutional buyers that are buying billions of dollars of Bitcoin, so the floor is in. We're just waiting for retail to come in, for that FOMO to kick in. So when you see Doge run up, you know it's about to be party time, baby. One of the ways that you can invest into AI, scarcity, compute, and infrastructure is by working with a company like SAS Mining. They allow you to buy a Bitcoin miner, which checks all of the boxes that Larry Fink just talks about. Except the beautiful thing is, you don't have to manage it. They have the machines, they repair them, they send sats straight to your wallet. You invest in the decentralization of the Bitcoin network, and you become more sovereign in the process. Use the QR code to get started. And if you haven't already done so, subscribe to the channel. We drop fire like this 7 days a week. Happy Sunday and happy stacking. Who do you have for Game 7 tonight?